Good afternoon, and thanks for joining me this afternoon. I'm going to speak about Argonaut's projects in Zambia, in particular Lumwana West, and in South Australia. Argonaut is listed on the ASX, stock exchange code ARE. We have 1.5 billion shares out there and about just over $1 million cash in the bank. We have a strong board of people who have been around these sorts of things for a long time. Pat Elliott is a mining financier and seed capitalist, mineral economist. Malcolm Richmond is a former managing director of Hammersley Iron. As I mentioned earlier, copper in South Australia, copper-cobalt in Zambia, and we have a gold and nickel joint venture in Western Australia in the Eastern Goldfields. In Zambia, at Lumwana West, we have a copper-cobalt deposit called Nyungu. Nyungu features a low stripping ratio. We've produced in the laboratory just in recent weeks a saleable concentrate from the main ore zone. We're progressing with a scoping study and we hold the project 90%. Zambia has quite a number of positive aspects in terms of getting a mining project going. They're very pro-mining. They have a 100-year plus history with copper mining in the area. We're in a part of Zambia with considerable mining infrastructure and a lot of recently constructed mining projects. We're moving through the processing flow sheet test work phase and into the modelling of scoping economics. So our project there at Nyungu sits in between First Quantum's Sentinel mine and Barrick's Lumwana mine, not far from First Quantum's Kansanshi mine. We are on the main highway heading into the northwestern province in Zambia near the DRC border, and we have high voltage electricity infrastructure throughout the tenement. At Nyungu Central, it's our main deposit. We have drilled this deposit over a strike length of 1,700 metres, and this is the cornerstone of the project there. We've also intersected some copper mineralisation to the south at what we call Nyungu South, which requires some further drilling to flesh out that work. At the moment we have a JORC exploration target and we need to move this shortly to a JORC resource, but the exploration target is essentially around about 155 million tonnes at 0.55 copper for a total of about 800,000 tonnes of contained copper. One of the interesting things about this deposit is its geometry. The stripping ratio of the deposit is exceptionally low. We're working with a stripping ratio of 1.5 to 1 down to a pit depth of 280 metres, which is particularly low. And if we take our entire geological wireframe of mineralisation drilled to date, we're still at a very low stripping ratio of 2.3 to 1. So as the project moves forward, that's where we have some latitude to extend the resource down plunge. In recent months, we have been conducting metallurgical test work on 4 metallurgical samples we exported from Zambia to Australia. We have succeeded in producing a nice clean concentrate that's suitable for sale to smelters at an 87% recovery rate, running at 25.6% copper. In concert with that, we've produced concentrates in the laboratory for other purposes. We're running the numbers on 3 different flow sheet propositions at the moment. One of them would be simply a flotation circuit and sale of concentrate to the smelters. Secondarily, concentrate circuit, roast, leach, SXEW. And thirdly, a concentrate circuit, Albion, process, oxidation, precipitation and SXEW. We're going to be modelling those numbers over the next few months as the remaining data comes in. But for the purpose of Albion and roasting, leaching, we've produced concentrates. And interestingly, 88% recovery in the transitional zone, which is exceptionally high for those of you who have worked with these sorts of projects before, and 96% recovery in the primary zone. There's some of the concentrates we've been producing in the last month or so. We're moving back into a phase also of scheduling the mine to see how the chemistry looks over the course of time as we move towards scoping economics. During the course of 2019, we picked up 2 new projects in Zambia, in addition to our Lumwana West project. One of them we call Kalaba East, which is next door, literally neighbouring the Arc Minerals discovery that's been progressively coming out to the market recently, and another on the Angolan border in an area which was serendipitously subject to a gold rush a few months ago. So we're looking to add one more important tenement to that package, and then we will have a Zambian package which we think is better suited to a listing in London than it is to ASX, and so the company, when the time is right in the copper market and in the investment cycle, will look into spinning that out into either an AIM or a main board listing, whichever seems appropriate at the time. And that's the location of our Kalaba East project there, compared to the Arc Minerals results that you may have been reading about recently. I'm going to briefly touch on our South Australian work. We have a slew of tenements at the eastern margin of the Gawler Craton in South Australia, nearby to BHP's Olympic Dam mine. We're the junior with the largest tenement holding in this really prospective, high tonnage, high grade environment. You can see in the northwest of that map the Olympic Dam mine. Down from that, labelled Oak Dam West, is the discovery by BHP, the first exploration result announced by BHP specifically, I think, since the 1970s, and for good reason. They drilled 425 metres at 3% copper, including 180 metres at 6% copper, into one of these gravity targets in the eastern Gawler Craton. It's a spectacular address for exploration, and when the discovery holes have come, they have all been spectacular, but that has been the most spectacular hole to date. So we're in a good address. On that map there, this is our Murdie project in South Australia. You can see the orange area is onshore, on sheep station country. The blue areas are offshore, and the green areas are what we call near shore. And we're looking at doing a lot of our deep diamond drilling from these near shore areas, where we can drill holes. Last year in 2019, we were drilling nearby with helicopter supported drilling, and for this particular project at Murdie, we're looking at doing track mounted drilling adjacent to the shore, which is important to us in terms of managing the cost of that drilling. So the environments that we're working in are those that I've just mentioned there. So we'll be drilling in the sort of area you're looking at on that slide, just close to the edge of the lake. Now, we have our native title approval granted, which is the difficult approval in this part of the world. Last week, we announced that the state government had granted us operational approval for the drilling and environmental approval for this drilling, and we're moving right now to complete the permitting process. We have an application in with the state government for an approval that we have been granted 3 times in the past. We're seeking again, which is an Aboriginal heritage approval. Just touching briefly on the work that we have been doing, that is our drill rig on Lake Torrens, the dry salt crust of Lake Torrens. That photo was taken in April or May 2019, helicopter supported deep diamond drilling program with the highest environmental standards South Australia has seen to date, and certainly a lot of jurisdictions would have seen to date. We're 30% of that project. The drilling isn't underway at the moment. Our partners, we're looking at a realignment of that joint venture with our existing partners unable to continue the funding, and so Argonaut's working on substituting those existing partners for somebody with a clearer reason to be exploring in deeper pockets for the exploration. The Torrens project has enormous potential, and I'm out of time now, but I thank you for your attention today and have a great remainder of the 121 conference.